Good morning, boys and girls. Welcome to key explanation session number 3 on CA Foundation, December 2021, Principles and Practices of Accounting paper. In last two sessions, question number 4 has been completed. Up to last two sessions, discussion on question number 4 has been completed. Now in this session, let us discuss the remaining two questions of the question paper, namely question number 5 and question number 6. So let us start this session with question number 5. In question paper, question number 5 comprises of two questions. So question number 5A belongs to chapter called Rectification of Errors, and question number 5B belongs to chapter called Final Accounts of Manufacturing Concern, boys and girls. So let us start this session with question number 5A. So paper setter has given 5 errors and he is asking you to write rectification entries for 5 errors, boys and girls. So question number 5A, pass the journal entries to rectify the following errors detected during preparation of trial balance. It means all the errors, it means the 5 errors which are given in the question paper are detected during preparation of trial balance. Coming to error number 1, wages paid for construction of office building is a capital expenditure debited to wages account 2000. When wages are paid for construction of building, it should be debited to buildings account, but accountant wrongly debited to wages account. So the actual entry the accountant have to write is, when wages are paid for construction of building, the journal entry is buildings account debtor 20,000 to bank account 20,000, but accountant wrongly wrote like this, wages account debtor 20,000 to what? Bank account 20,000. So actually for this transaction, building account have to be debited. Accountant wrongly debited to wages account. So what is the rectification entry for this error? Buildings account debtor. Buildings account debtor. How much? 20,000 to wages account 20,000. Okay, being wages paid for construction of building, wages paid for construction of building wrongly debited to wages account, comma, error is rectified. So here the rectification entry is buildings account debtor to wages account, boys and girls. Next, coming to second error, a credit sale of goods 1,200 to Mr. Ramesh has been wrongly passes through the purchase book. Actually, we sold goods worth of rupees 1,200 to Ramesh, but accountant wrongly passes through the transaction to purchase book instead of sales book. So what is the journal entry we have to write? When goods are sold to Ramesh on credit, the journal entry is Ramesh account debtor 1,200 to sales account. So this is the correct entry the accountant have to write. But what the entry accountant wrote? Accountant wrote like this. So purchases account data 1200 to Ramesh account. How much? 1200. So what is the rectification entry you have to write now? See, Ramesh account data within brackets 1200 plus 1200 account data 2400 to డెబిట్ లో ఉన్న పర్చేజెస్ ని క్లోజ్ చేయాలంటే క్రెడిట్ చేయాలి. టు పర్చేజెస్ అకౌంట్ 1200. నెక్స్ట్ టు వాట్? సేల్స్ అకౌంట్ 1200. క్లియర్? సో డెబిట్ లో ఉన్న క్రెడిట్ లో ఉన్న రమేష్ ని క్లోజ్ చేయడానికి డెబిట్ చేసాం, బట్ ఒరిజినల్ గా ఒకసారి డెబిట్ చేసాం. రమేష్ అకౌంట్ షుడ్ బి డెబిటెడ్ విత్ 2400. సో ద నరేషన్ being a credit sale to Ramesh of rupees 1200 wrongly recorded as purchases, comma, error is rectified. Clear? Next, coming to third transaction, an amount of 2000 due from Maheshan, which has been written off as bad debt, not in this year, in the previous year, was unexpectedly recovered. Right? So the background of this story is, in the previous year, Mr. Maheshan is a debtor to us for an amount of rupees 2000. Everyone clear? So he is not able to pay that amount in the last year, and we write off it as bad debt. Right? What is the journal entry for bad debts in the last year? See, bad debts account data, how much? It's 2000. Yes, bad debts account data 2000 to Maheshan account 2000. Accountant already wrote this entry in the last year. So Maheshan account was closed in our books of accounts. See, but in this year that amount was unexpectedly recovered. What the accountant have to write now? The journal entry is like this: cash or bank account data 2000 to bad debts recovered account. Right? See, when a debt is write off as bad debt, it is subsequently realized or recovered na, it should be credited to bad debts recovered account. But what accountant wrote na? He'll write like this: cash or bank account data 2000 to Maheshan account. So instead of crediting bad debts recovered account, accountant wrongly credit Maheshan account. Now what is the rectification entry you have to write? So in order to cancel the Maheshan account, see, Maheshan account data amount, Maheshan account data 2000 to bad debts recovered account. Bad debts recovered account. This is the rectification entry, being bad debts recovered from whom? Maheshan. Bad debts recovered from Maheshan wrongly credited to his personal account, comma, what is rectified? Error is rectified. Everyone clear? Next. Shall I? Next. So goods cost being 5,000 and the sales price of the same being 6,000 distributed as free samples among prospective customers were not recorded anywhere. It's an error of complete omission. Listen here. Goods worth of rupees. It means the cost price of the goods will be 5,000 and sales price of the goods will be 6,000. Point number 1. When goods are distributed as free samples, now the question arises, the journal entry should be recorded for cost price or sales price, right? When goods are distributed as free samples, now the journal entry should be recorded for cost price. We discussed from the initial topic called journal itself. And we also covered this topic in final accounts also. And the same has been discussed in rectification of errors also. Now what is the rectification entry? When goods are distributed as free samples, sample distribution account data to purchases, or instead of debiting sample distribution account, you can debit advertisement account. So advertisement account data to purchases account. Advertisement account data amount. Advertisement account data, how much? 5,000 or 6,000? 5,000. Advertisement account data to purchases account. Clear? Being goods are distributed as, being error is rectified enough. So it is an error of complete omission. So coming to the last transaction, boys and girls, once again it is also an example of error of complete omission. Goods worth rupees 1,500 written by Green. Green means sales returns or return inwards have not been recorded anywhere. Once again, it's an error of complete omission, boys and girls. Right? So the journal entry is, what is the journal entry? Sales returns account data. How much? Sales returns account data 1,500 to Green account 1,500 being goods worth of rupees 1,500 returned by Mr. Green, not recorded in the books of accounts, not recorded in the books of accounts, comma, what is rectified? Error is rectified. Everyone clear? So these are the 5 rectification entries for 5 errors. So first error is an example of error of principle. This is error of commission, and next this is also error of commission. Next, error of complete omission, error of complete omission, boys and girls. Right? So with this, key for question number 5A has been completed. We'll move on to question number 5B. So which is the question from final accounts of manufacturing concern. When I start the introduction of this topic, I told you for this attempt, we are going to expect a question from this attempt for 15 marks or 20 marks. So as per our expectation, the same question has been landed in the examination question paper for 15 marks. So the question also covered in revision examination as well as grand examination, boys and girls, right? So please make note of it. We'll move on to next question called question number 5B. Question number 5B. Okay, boys and girls, question number 5B is the question on preparation of financial statements of a manufacturing concern. On 31st March 2021, the trial balance of Mr. Black was as follows. Stock as on 1st April 2020, opening stock of raw material amounting to 2,20,000. That item will be recorded or debited to manufacturing account. Next, work in progress recorded in manufacturing account. Opening stock of finished goods will be recorded in trading account. Sundry debtors balance sheet. Carries on purchases debited to manufacturing account. Next, bills receivable amounting to 1,50,000, boys and girls. So shown on asset side of the balance sheet. Next, wages should be debited to trading account. Next, salaries, some other information is there, will go as per that adjustment. Telephone and postage will be debited to profit and loss account. Repairs to office furniture should be debited to profit and loss account. Cash at bank 1,70,000 will be recorded on asset side of the balance sheet. So office furniture is also an asset, will be recorded on asset side of the balance sheet. Repairs to plant, next debited to manufacturing account. Purchase of raw material should be debited to manufacturing account. Plant and machinery shown on asset side of the balance sheet. Rent 60,000 will go as per adjustment. Next, lighting, boys and girls, should be debited to manufacturing account, actually will go as per adjustment. General expenses debited to profit and loss account. The following additional information is available. Stock as on 31st March 2021, nothing but closing stock. As we discussed it, the closing stock of manufacturing concern consists of three components: raw material, finished goods, work in progress. Salaries and wages unpaid for the year ended 31st March 2021 were respectively 9,000 and 20,000. It means outstanding salaries for the year ended 31st March 2021 were 9,000 and wages were 20,000. Next, machinery is to be depreciated by 10% and office furniture by 7.5%, right, depreciation. Next, a provision for doubtful debts is to be maintained at the rate of 1% of sales. Instead of calculating provision for the bad and doubtful debts on debtors, paper setter is asking you to consider to calculate the provision for bad and doubtful debts on sales value. Rent 60,000 is given. What they said that out of total rent of rupees 60,000, 3/4 was charged to factory itself, means should be debited to manufacturing account. 1/4 should be charged to office, means profit and loss account. So lighting is to be charged as to 2/3 to factory. It means 2/3 of the lighting expenditure should be debited to manufacturing account and 1/3 to office. So prepare manufacturing account, trading account and profit and loss account. Remember, paper setter is not asking you to prepare balance sheet, boys and girls. So question number 5B. So first let us go for preparation of manufacturing account and trading account. So here sole manufacturer, manufacturing account of Mr. Black for the year ending. What is the year ending date? 31st March 2021. Debit credit symbols used properly. Next, particulars, rupees. Particulars, rupees. So everyone clear? So opening stock of raw material, how much? It's 2,10,000. So first, opening stock of raw material. Okay, just a minute. Right. So opening stock of raw material to opening stock of raw material amounting to how much? It's 2,10,000. 2,10,000. Thereafter, purchase of raw material is given na to purchase of raw material amounting to 8,50,000 by closing stock of raw material amounting to 78,000. Clear? So opening stock plus purchases minus closing stock. You can call it as raw material consumed. Alternatively, you can present like this: to raw material consumed, opening stock plus purchases minus closing stock. Thereafter, you should focus on opening and closing work in progress. So to opening work in progress amounting to how much? 95,000. Next, by closing work in progress amounting to, so closing stock of raw material, just a minute boys and girls, I'll check the information. Yeah, it's not 78, I'm sorry, it's 1,62,000. And the closing stock of or closing work in progress is 78. I'm sorry. Right. Next, opening work in progress, closing work in progress. Thereafter, you have to focus on direct expenses. So, carriage on purchases is one of the expenditure na debited to manufacturing account. To carriage on purchases amounting to 15,000, and wages, amount of wages is given in trial balance na to wages 1,30,000. In adjustment, outstanding is given na, have to pay outstanding wages amounting to how much? 20,000. Total 1,50,000. Next, so repairs to plant, like that some expenses are there. Yeah, repairs to plant should be debited to manufacturing account, and depreciation on plant and machinery is there na? Yes, to repairs to plant amounting to how much? 11,000. Next, 2 depreciation on plant. So what is the amount of plant given in the trial balance? So the amount of plant and machinery is 7 lakhs, boys and girls. So paper setter is asking you to calculate depreciation on plant and machinery at the rate of 7%. So 7 lakhs into 10%. How much? 70,000. So 2 more special expenses are there. So rent total 60,000 is there na. Out of rent of rupees 60,000, in adjustment they said that 3/4 belongs to the factory. See, to rent 60,000 into 3/4, 45,000. Next, lighting. Out of total lighting cost 13,500, 2/3 belongs to the factory. So to lighting. So 13,500 into 2/3. It's how much? 9,000. So these are the items to be recorded in manufacturing account. Again, we'll check as per the facts of the question. From repairs to plant. So all are recorded. Now we'll go for balancing of account. The balance is transferred to trading account. And one more point is there, boys and girls. Yes, sale of scrap. It means the scrap which arises after processing of material. If any sale proceeds are arised from that scrap, it should be credited to manufacturing account by sale of scrap amounting to how much? 25,000. Everyone clear? So these are the items to be recorded in the manufacturing account. Okay, so 210 plus 95 plus 95. So the total will be the total of debit side of trading account is 14,45,000. From that, if you deduct all the three amounts on credit side of manufacturing account, the result is 11,90,000, boys and girls. So it should be transferred to trading account. The outcome of manufacturing account is cost of goods manufactured, and that result will be transferred to trading account. Now in the second part, we'll go for preparation of trading account. So trading account of, what is the name of the sole manufacturer? Trading account of Mr. Black for the year ending 31st March 2021. So here also you have to use debit and credit symbols. Particulars rupees, particulars rupees. So first trading account should be debited with opening stock na, since raw material and work in progress are already recorded in manufacturing account. Opening stock of finished goods will be debited to trading account. To opening stock of finished goods. opening stock of finished goods amounting to 1,55,000. From manufacturing account, the result is transferred to trading account to manufacturing account amount 11,90,000. Cost of goods manufactured. Right, next it should be credited with closing stock of finished goods. But before crediting closing stock of finished goods, one more item should be credited to trading account, sales. By sales, how much? 16,72,000. So closing stock of finished goods is there na? Closing stock of finished goods, as per the question, it's how much? 1,81,000. So 16,72,000 plus 1,81,000, it's 18,53,000. 53,000. So from 18,53,000, if you deduct 11,90,000 and opening stock of finished goods, so the result is gross profit. Gross profit carried down, transferred to where? Profit and loss account. How much? 5,08,000. So the result of trading account is the gross profit. So it should be transferred to profit and loss account. In next part, we'll go for preparation of profit and loss account. So this is the answer for manufacturing account and trading account. Since wages is already debited to manufacturing account, it should not be debited to trading account, boys and girls. Right? Please make note of it. We'll move on to the next part, which is profit and loss account. I hope you are clear. Right, we'll go for preparation of the last part. That is profit and loss account. Profit and loss account of Mr. Black for the year ending 31st March 2021. Debit, credit. Okay. Particulars, rupees. Particulars, rupees. See, from trading, it means the result of trading account is gross profit na? It should be transferred to profit and loss account by gross profit brought down. Transferred from where? Transferred from trading account. How much? 5,08,000. Let us check, are there any indirect incomes like commission, interest? For that, you should focus on credit column of the trial balance. So sundry creditors, bills payable, sale of scrap, commission received is there na? How much? 4,500 by commission received 4,500. Now all indirect expenses should be debited to profit and loss account. First one, salaries, right? 1 lakh. For salaries, there is an adjustment called outstanding salaries, na? To salaries. How much? 1 lakh. Add outstanding or accrued amounting to 9,000. 1 lakh 9,000. Next, telephone and postage. 2. Telephone and postage amounting to 10,000. Next, repairs to office furniture. 2. Repairs to office furniture. How much? 3,500. Next, general expenses. General expenses amounting to 15,000. Next, provision for bad and doubtful debts. This time paper setter is asking you to consider provision for bad and doubtful debts on sales. Na? See, what is the amount of sales? 16,72,000. On that 16,72,000, if you apply 1%, the provision you have to be maintained in total is 16,720. But already existing provision is there, na? See, on the credit side of trial balance, provision for bad and doubtful debts, existing provision 16,500 is there, na? It means the difference 220, boys and girls. So, 2 provision for doubtful debts. 2 provision for doubtful debts. 16,72,000 into 1%. How much? 16,720. Already existing provision is there, na? 16,500. Difference is 220. Okay. And depreciation on furniture at the rate of 7.5% is there, na? So what is the book value of the furniture? As per facts of the problem, what is the book value of the furniture? Office furniture 1 lakh. On that you have to apply 7.5%. 7,500 to depreciation on furniture. 1 lakh into 7.5%. How much? 7,500. Next, rent. Rent total 60,000. Out of 60,000, 3/4 was charged to factory and 1/4 was charged to office. Na? See, to rent 60,000 into 1/4. 15,000. Like that, lighting also. Lighting. What is the amount of lighting? 13,500. Already 2/3 charged to factory. Now 1/3. 13,500 into 1/3. 4,500. Let us go for totaling of credit side of P&L account. We'll check the answer. So, So 347,780 is the amount of net profit. 5,12,500. Next 5,12,500. So to net profit. 3 lakhs how much? 3,47,780. It should be transferred to capital, boys and girls. So this is the complete answer for question number 5. Now let us move on to question number 6. Fashion garments. So which is the question on company accounts, boys and girls. Okay, boys and girls, let us move on to the last question of the question paper. That is question number 6, which comprises of 2 questions. Question number 6A is the question on company accounts for 15 marks, and question B, 6B is the theory question from Institute Study Material. It means it is the direct question from Institute Study Material itself. So let us go for discussion of question number 6A. Fashion Garments Limited invited applications for issuing 10,000 equity shares of rupees 10 each. The amount was payable as follows. The name of the company is Fashion Garments Limited, and it issues 10,000 equity shares, and 10,000 shares are issued at face value, which is to be collected in installments as follows. On application, 1 per share. On allotment, company is willing to collect 2 per share. On first call, 3 per share. On second and final call, 4 per share. So 1 plus 2 plus 3 plus 4, total 10 rupees face value, right? The issue was fully subscribed, right? So applications are received for 10,000 equity shares. Full subscription. There is no concept of oversubscription. There is no concept of undersubscription. Mr. Ram, to whom 100 shares were allotted, failed to pay the allotment money. So out of 10,000 equity shares, we allotted 100 shares to Mr. Ram. The guy fails to pay allotment money, and his shares were forfeited immediately after allotment. Okay, next, Mr. Sham, to whom 150 shares were allotted, fails to pay the first call. It means Mr. Sham pays application, allotment. He fails to pay first call. After the second and final call was made, Mohan, to whom 50 shares were allotted, failed to pay the second and final call. His shares also forfeited. All the forfeited shares were reissued at 9 per share, fully paid up. Pass the necessary journal entries in the books of Fashion Garments Limited. Remember, boys and girls, 10,000 equity shares are allotted to the public. Mr. Ram, who holds 100 shares, fails to pay allotment. Mr. Shah, who holds 150 shares, fails to pay first call. Right? Next, his shares were forfeited after first call itself. Special point. The shares allotted to Ram were forfeited after allotment. Next, after the second and final call was made, Mohan, to whom 50 shares were allotted, fails to pay the second and final call. All the forfeited shares were reissued at 9 per share. Pass the journal entries in the books of Fashion Garments Limited. Everyone clear? Shall I? Listen carefully. Listen. So what is the name of the company here? Fashion Garments Limited. On application we are receiving 1 per share na. See, date is not given, date, particulars, listen carefully. LF, debit, credit. Right? So on applications we are receiving 1 per share. What is the journal entry on application? The journal entry is bank within brackets 10,000 shares into 1. Account data 10,000 to equity share application account 10,000. So application amount is received on 10,000 equity shares at the rate of 1 per share, being application amount is received on how many shares? 10,000 shares at the rate of 1 per share. Right? So the second entry is the transferring entry. The balance in equity share application is closed and transferred to equity share capital. What is the journal entry? Equity share application account data 10,000 to equity share capital account 10,000. Okay, being equity share application is closed and transferred to equity share capital. Hey, listen, the special point here. So 10,000 shares are allotted to the public. On allotment we are collecting 2 per share. So what is the due entry in the event of allotment? Listen, first 3, equity share allotment. How many shares? And we are collecting 2 per share. 10,000 shares at rate of 2 per share. 20,000 to equity share capital account 20,000. Listen. Being allotment is made on 10,000 shares at the rate of 2 per share as per board resolution dated. Okay, next. See, when allotment is made to shareholders, we are collecting 2 per each equity share. One guy, Mr. Ram, holds 100 shares, fails to pay the allotment amount. It means allotment amount is received only on 9,900 shares. On 100 shares who held by Mr. Ram, he fails to pay the allotment money, na? Right. So allotment amount is received only on 9,900 shares. What is the receipt entry of allotment? 9,900 shares into 2 account data 19,800 2. Equity share allotment account 19,800. C. Being allotment amount is received on 9,900 shares at the rate of 2 per share. See, in all the problems, forfeiture has been done after second and final call. But the speciality of this question is forfeiture has been done. It means the 100 shares allotted to Mr. Ram has been forfeited after allotment itself. In the facts of the question, how many shares are allotted to Mr. Ram? 100. Right? He pays application money, but he fails to pay allotment money na. See, up to now, how much is transferred to share capital? 1 plus 2, 3 per share. Up to now, in respect of that 100 shares, 3 per share is capital 2. See, 3 per share is transferred to equity share capital na. Out of the 3 per share, he pays only 1 per share. It should be credited to share forfeiture account. And listen carefully, boys and girls. He fails to pay allotment money na. Now the journal entry for that forfeiture is, listen, what is the journal entry for that forfeiture? Equity share capital within brackets 100 shares into 3, account data 300, to shares forfeiture 100 into 1 account 100, to equity share allotment, equity share allotment 100 into 2 account 200, being 100 shares allotted to Mr. Ram or forfeited for non-payment of allotment. Everyone clear? See, here forfeiture has been done after allotment itself, right? That is the special point. Now tell me, boys and girls, out of 10,000 shares, only 100 shares are forfeited. It means you are able to call further calls only on 9,900 shares. Clear? We'll go for next one, boys and girls. Now, we'll go for second and final call na. Date, particulars, next LF, debit and credit. So first call is to be made only on 9,900 shares. Out of 10,000 shares allotted to the public, 100 shares are forfeited na. Now we are able to make final call only on 9,900 shares. What is the journal entry? Equity share first call 9,900 into 3, account data how much? 29,700 to equity share capital account 29,700 being first call is made on 9,900 shares at the rate of 3 per share. See, now the journey of Ram ends with allotment. Now, one more shareholder journey ends in first call. What is the name of that shareholder? Shyam. See, we are calling 3 per share on first call for how many shares? 9,900 shares. Out of that 900 shares, Shyam is the shareholder holding how many shares? Okay, 150 shares. He fails to pay. Okay, he fails to pay. First and final call. Right. Now, first call amount is received. Bank within brackets 9,900 minus 150. So, 9,750 shares into 3 per share account data. How much? 29,250. Remaining calls in arrears na? Calls in arrears 150 shares into 3 account data 450 to equity share first call account 29,700 being first call amount is received on 9,750 shares and amount on 150 shares is transferred to which account? Calls in arrears account. Clear? Now 150 shares allotted to Mr. Shyam are forfeited. See, up to now in respect of 150 shares we called application 1, allotment 2, first call 3, 6 rupees. Up to now we call on per share. ఒక్కొక్క షేర్ కి ఇప్పటి వరకు మనం 6 రూపీస్ పిలిచాం. ఆ 6 రూపీస్ లో శ్యామ్ అప్లికేషన్ పే చేశాడు, అలాట్మెంట్ పే చేశాడు. ఏం పే చేయాలా? ఫస్ట్ కాల్. కాల్స్ ఇన్ ఏరియాస్ కి ట్రాన్స్ఫర్ చేసావుగా. నౌ వాట్ ఈస్ ద జనరల్ ఎంట్రీ ఫర్ ఫ్యూచర్ బాయ్స్ అండ్ గర్ల్స్? ఈక్విటీ షేర్ క్యాపిటల్ within brackets of 150 shares into 6 account data 900 to shares for feature 150 shares into 3 account 450 to calls in arrears. How much? 150 shares into 3 account 450. Okay, being 150 shares are forfeited for non-payment of first call. Very good question given in examination. See, normally forfeiture has been done after all the calls has been made, but ikkada installments lo అలాట్మెంట్ దగ్గర 100 షేర్స్ ఫర్ఫిట్ చేసాం. ఫస్ట్ కాల్ అయిపోయిన తర్వాత 100 షేర్స్. నౌ మొత్తం 10,000 షేర్స్ మనం ఇష్యూ చేస్తే 100 షేర్స్ అలాట్మెంట్ దగ్గర ఫర్ఫిట్ చేసాం. 150 షేర్స్ ఫస్ట్ కాల్ లో ఫర్ఫిట్ చేసాం. ఇంకా మనం సెకండ్ కాల్ మీద పిలవగలిగినవి ఓన్లీ 9,000. See, 750 into 4. How much? Out of 10,000 shares, 100 shares are forfeited at the time of allotment. 150 shares are forfeited in the event of first call. Balance 9,750 shares midde manam final call pilavagalam. Everyone clear? Now listen carefully, boys and girls. What is the journal entry for second and final call? Equity share. Second and final call. Account debtor how much? 9750 into 4, it's how much? 39,002. Equity share capital account 39,000. Okay, being second and final call is made on 9,750 shares. Just a minute, boys and girls. Small technical issue, just a minute. Yes, boys and girls, it's a small technical issue. Now the issue has been resolved. Right, see, here the second and final call is made on 9,050 shares, 750 shares at the rate of 4 per share. Right? When final call is made on 9,750 shares, another shareholder, Mr. Mohan, fails to pay the amount on 50 shares. మనం సెకండ్ అండ్ ఫైనల్ కాల్ 9,750 షేర్స్ మీద పిలిచినప్పుడు మోహన్ అనే షేర్ హోల్డర్ 50 షేర్స్ హోల్డ్ చేసి దట్ గై ఫెయిల్స్ టు పే సెకండ్ అండ్ ఫైనల్ కాల్. ఇట్ మీన్స్ సెకండ్ అండ్ ఫైనల్ కాల్ అమౌంట్ ఈస్ రిసీవ్డ్ ఆన్ 9,700 shares at the rate of 4 per share. So 9,700 into 4, how much? It's 38,800. Amount on 250 shares is transferred to calls in arrears, na? Calls in arrears. 50 shares into 4 account debtor 202. Equity share second and final call account, how much? 39,000. Clear? Being second and final call is received on 50 shares at the rate of 4 received on, 9,700 shares at the rate of 4 per share, and amount on 50 shares is transferred to calls in arrears. Now we have to go for forfeiture of rest 50 shares, na? Everyone clear? We'll go for forfeiture of rest 50 shares. Everyone clear, boys and girls? Everyone? So we are left with last entry. Here the forfeiture has been done at installments. So allotment amount is fails to receive on 100 shares. 100 shares are forfeited. First call amount is not received on 150 shares. 150 shares are forfeited. Now second call amount is not received on 50 shares. Now those shares are to be forfeited. What are the journal entries for those? We'll discuss. Okay, now we'll go for forfeiture of those 50 shares. See, Mr. Mohan is the shareholder holding 50 shares, fails to pay second and final call. He pays application, allotment and first call. What is the journal entry? Equity share capital 50 into 10, 500. Account data 500. 2. Out of 10 rupees, the guy fails to pay only second and final call. He pays 6 per share na. 2. Shares forfeiture 50 into 6, 300. 2. Calls in arrears account 200, which was debited in earlier entry, now credited in this entry, being 50 shares allotted to Mr. Mohan or forfeited for non-payment of second and final call. See, boys and girls. Now, totally how many shares were forfeited? First 100, next 150, now 50. Total 300 shares are forfeited. Now these 300 shares are reissued at 9 per share. The balance should be utilized out of share forfeiture. First you have to check share forfeiture account should be credited with how much, right? While forfeiting 100 shares on allotment, share forfeiture account should be credited with 100. See that entry. While forfeiting 150 shares on first call, share forfeiture account should be credited with 450. Now on second and final call, it should be credited with 300. So total share forfeiture account should be credited with 850 on these three individual forfeiture events. It means the credit balance in share forfeiture account is 850. Now you are reissuing how many shares to the public? 300. 300 into 1. You should be utilizing 300 out of 850. The balance 550 should be transferred to capital reserve. Simple. Right. What is the journal entry? Bank. How much you are collecting? Totally we are reissuing 300 shares. We are collecting 9 per share. 300 into 9 account data 2700. Sir, what about balance, sir? We are not able to collect that 1 per share. We are giving discount to the shareholder on this reissue event. The balance should be utilized out of share forfeiture. What is the credit balance in share forfeiture? Right? 850. So, shares forfeiture account data 300 to equity share capital 300 shares into 10. How much? 3000. Being 300 shares are reissued at 9 per share, fully paid up. Everyone clear? Now, out of total credit balance of 815 share forfeiture, we are utilizing how much? 300. What is the balance? 550. Since all the forfeited shares are reissued, the balance in share forfeiture account is transferred to capital reserve. What is the journal entry? Share forfeiture 850 minus 300 account debtor 550 to capital reserve account 550 being the balance in share forfeiture account is transferred to where? Capital reserve. Okay. So this is the question for question number 6A, boys and girls. And question number 6B consists of two questions. So what do you mean by principal books of accounts? So we already discussed in subsidiary books concept na. See, so financial books are divided into two categories, principal books and subsidiary books. Again, principal books consists of two categories, cash book, right? Next, ledger. Subsidiary book is further divided into 7 categories we discussed in our regular class. Next, what are the rules of posting journal entries into the ledger? Right, totally there are 3 rules for posting journal entries into the ledger. So first one is in respect of each journal entry you have to open respect accounts in the ledger. While posting on the debit side of the account you have to use symbol called to, and while posting on credit side of the account you have to use the symbol called by. Next, then the concerned account in the debited in the journal should also be debited in the ledger. If a particular account is debited in the ledger journal, it should also be debited in the ledger. If a concerned account is credited in the ledger, it should also be credited in the ledger. So these are the 3 rules applicable for regarding. They are not asking balancing, they are asking only rules for posting. In respect of every entry you have to open respective accounts in the ledger. If you are posted on the debit side of the account now, you have to use the symbol called to, and if you are posted on the credit side of the account now, you have to use the symbol called by. Right, if an account is debited in the ledger, journal na, posting should be done on the debit side of that account with the name of the corresponding credit. Next, if the account has been credited in the journal na, posting should be done on the credit side of that account with the name of the corresponding debit. These are the 3 rules applicable for posting and entries in the ledger. Coming to principals books, we'll already discuss in that concept in subsidiary books. Very small question. So with this, boys and girls, the key explanation, the key explanation session comes to an end. Thank you.